So as some of you may have noticed in the past, I do own AT&T in my dividend portfolio, which is a company that many investors look down on. But in this video, we'll be discussing why I initially bought T stock over 3 years ago, what has changed with the business and company in that time period. We'll also talk about some mistakes that I did make with that initial purchase with AT&T, and then ultimately we'll discuss why I really have no plans to sell my shares anytime soon. So I bought my first share of AT&T all the way back on February 25th of 2020, which was just at the beginning of the COVID pandemic and subsequent market crash. And that was about a month before the market bottomed, actually. So I bought this share at a cost of around $37.50, but this cost was before the Warner Media spinoff. So at an adjusted price, that's more like $28. I also want to kind of get you all to understand kind of where I was as an investor at this point in time. In February of 2020, I had been investing in individual stocks for only about 3 months, having opened my Robinhood account just after my 18th birthday in December of 2019. So to say that I was, new to investing would be an understatement for sure. At that point in time, though, I had kind of moved somewhat away from kind of the penny stock phase that a lot of people get into at the beginning of investing, and I kind of had moved towards dividend stocks a little bit and had kind of started to understand at least some things about dividend stocks, the concept of the dividend and stuff like that. But I certainly hadn't refined my strategy a whole lot based on ideas that I take into consideration today, like the quality of the business, the sustainability and growth potential of the dividend, or the valuation of the company that I'm buying at. And at that time, the market was just starting to crash, like I mentioned, because of COVID. And at least from my perspective, COVID didn't really seem like it would be a big issue. So I thought, hey, T looks attractively priced right now, and it pays a big dividend, over 5% yield. So I'll just buy some. And those two facts, I would say, were probably generally, fair statements. They probably weren't like incorrect at that point in time. But that certainly doesn't mean that an investment is bound to succeed. So I did make some mistakes actually for sure when I was buying tea, initially, and throughout the years, I've kind of made some additional mistakes. So I want to kind of talk about those a little bit. The first mistake for sure is just that I didn't do enough research on the company and have a good enough understanding of the business and the valuation and stuff like that before I bought it. I probably might not have even really done any research at all. I might have just, found the stock, so I paid a dividend and was like, hey, it looks to be down over the past few weeks. I'll buy some, sure. And that was, kind of how a lot of my investing, quote unquote, investing was, for the first few months for sure, and probably a lot of the first year, to be honest. And another mistake that I made in the beginning for sure was not managing my cash very well. And I didn't really have all that much cash to invest at that point in time. So, I invested a large portion of my available cash into T at that time. And then when the stocks continued dropping, and other stocks were dropping as well, I really didn't have much cash in order to be able to average down on that position. And then really on top of that, because of the fact that I didn't do adequate research, I really didn't even have the confidence in my investment at that point in time that really would have allowed me to average down, and be confident in that instead of being scared. So as Warren Buffett says, to be greedy when others are fearful, well, in order to be greedy when others are fearful, you really need to have confidence in your investment that comes from the research that you've done in the past. At least that's what I've come to find, I think. And another mistake I made is that I wasn't really at all cautious or wary of the high dividend yield. So in general, I would say, if a stock is yielding above 5%, which AT&T was at the time, you should probably look extra hard into that dividend and try to understand, whether the dividend is being paid in a sustainable manner and whether that dividend has room for growth in the future and will allow the business to grow in the future as well. Because any dividends that are paid out, from the business can't be reinvested internally in the business to grow the business more. So that could potentially, stunt the growth of a company if they have lots of opportunities internally to reinvest back into their business. So at the time, like I mentioned, the yield was about 5.5%, but the yield quickly climbed actually to above 6 and 7%. And it was actually above 9% at its peak at the end of 2021. I also want to enumerate some specific things that have changed with the company over the last 3.5 years. that have really led many investors to sell the stock and for the price to have fallen by over 50%. So at first glance, the revenue looks to have dropped pretty drastically, over 30% since its peak in 2019. A lot of that decrease was actually due to the spinoff of Warner Media in 2022, but just by a rough estimate, I think the revenue decline of the business segments excluding Warner Media was about 20%. So the core business has definitely struggled in the past few years. So that's part of the reason that some investors have become disillusioned with the stock, and the company has definitely been struggling as well with profitability and maintaining free cash flow. Free cash flow for sure has been decreasing as well, which is not good. Another big issue for the company has been their debt. So because of the nature of the telecom business, AT&T has a huge amount of debt, and like I said, this is kind of common in their industry. Other companies in the industry like Verizon, for example, have lots of debt as well, but AT&T has really struggled to pay down any substantial portion of their debt over the last few years, which is really going to be a larger issue in the coming years as they have to take on new debt in order to pay off their old debt, essentially. And the new debt that they're taking on is going to be at much higher interest rates, which will carry, much more carrying cost or interest charges over time, which could be a big issue. And another problem here with the debt is that, management keeps saying it seems that reducing debt is a high priority, but it really hasn't gone down all that much. Aside from the amount that got spun out with Warner Media. So, management is saying they want to do this, but just looking at the results, it doesn't look like they're really doing much to accomplish that, which is definitely not a good sign when you see management saying they want to do stuff, but it's not actually happening. So given how much the company seems to be struggling, why am I not selling my shares personally? So first of all, I think even though the company is struggling, there are some areas that are providing some opportunities for growth, such as 5G and fiber optics, and that could help them, stabilize the ship a little bit and start to take control. But my main reason really for keeping AT&T in the portfolio right now is that I see it as a tool that I can use to fund other investments. So right now the yield is over 7% and my yield on cost is over 6%. And that means that it's throwing off a decent amount of dividends, relatively speaking, which just gives me more cash that I can use to invest into other higher quality companies that have more growth potential and safety. And another factor as well is that AT&T is a relatively small position for me in the portfolio, probably about between 1 and 2%, I believe, right now. So I'm okay with having a kind of smaller position that has a little bit less growth potential, but it has, higher dividend potential over a shorter period of time. And so I think ultimately I would probably be interested at some point in selling my shares and exiting my AT&T position, within the next few years, maybe 5 years, but I think it would have to be at the right price. So right now I think is a fairly attractive price to be buying, but I don't think it's really a attractive price to be selling. With that said, I'm really not buying any more AT&T stock right now because since it is a lower quality company, in my opinion, I would need to see a very attractive price in order to be interested in buying it. So I think maybe more around like $13 would be pretty attractive. So I would probably buy a little bit more there. But $14 or $15 where the stock is trading right now, I think is generally attractive, but it's not super attractive and not attractive enough that I would be interested in buying it right now when I have other companies that I could potentially invest in that are, in my opinion, higher quality. And ultimately, this kind of leads us to one of the hard but fun parts of investing, and really a core part of investing, which is the fact that there's really no absolute right or wrong answer for everyone to do, and even for a particular individual, your quote unquote right answer can change and evolve over time depending on your specific situation and goals. So for me right now, like I've said before, I do have a lot of cash on hand, so I'm willing to invest some of it into maybe slightly lower companies, if I can get those companies at the right price, which I feel like around $13, like I mentioned, would be for AT&T. But if there are, lots of companies that are much higher quality that I'm interested in buying, and lots of those companies appear to be at attractive prices, then I would buy those instead and wouldn't allocate capital towards AT&T even if it was at $13. But right now, like I've said, I don't see many of those higher quality companies to be at pretty attractive prices. So that's why I'm, open to buying AT&T at $13. So that's really just a very long way of saying that everyone's investing strategy is going to be a little bit different, and you shouldn't invest your capital a certain way just because someone else is doing it that way, because most likely their goals are going to be different, their specific situation is going to be different, and so it doesn't really work just to kind of copy paste their investing strategy onto your portfolio. So I hope that even if you still don't agree with me on the viability of AT&T as an investment, you can at least begin to see my position and understand where I'm coming from. But with that said, I would love to hear all your personal opinions on AT&T, whether you think it's a great stock, a terrible stock, whether you think I'm right or wrong, because ultimately, as long as you kind of lay out a rational line of thinking and don't just say random stuff that doesn't make any sense, it will really benefit everyone, as everyone can always learn from different perspectives. And if you do want to discuss more about AT&T or other stocks, you can join my free Discord server where there's other long-term investors in there that talk on a day-to-day basis about different investments and things they're doing in their portfolio. So there'll be a link to that in the description. And also subscribe to the channel so you don't miss out on future investing videos. Thanks for watching, and I'll see you all in the next one.